Alright, for this video I want to go through a sample form 3520, which is an annual return to report transactions with foreign trusts and the receipt of foreign gifts. So in this example we have a U.S. taxpayer, Sarah taxpayer. She's a citizen and resident of Florida, and she has to file the 3520 to report gifts from a foreign corporation. So we'll go through the full 3520 here. And we've also got just one slide covering some background on these gifts from foreign corporations and some more details on the fact pattern itself. So generally the 3520, we're seeing these filed because a U.S. person has some type of relationship with a foreign trust. So they're the beneficiary or they're the grantor, and they need to file for those reasons. But the 3520 is also required when U.S. persons receive gifts from non-residents. So these are non-resident individuals, foreign estates, or foreign corporations or partnerships. Now, when a U.S. person receives gifts from non-resident individuals or foreign estates, the reporting threshold is an aggregate of 100,000. So if you have more than 100,000 in total gifts for the year from foreign persons, you have to file the 3520. However, the reporting thresholds for foreign corporations and foreign partnerships is much lower. So the reporting thresholds for FCs and foreign partnerships in 2023, it's anything over 18,567, and it goes up to 19,570 for 2024. And so these are adjusted and indexed for inflation purposes. Now, gifts from foreign corporations, totally not recommended, right? And there's a couple reasons why. So the first is there's this presumption that a transfer from a foreign corporation that's a gift is basically a dividend distribution. And so the rule under the regs, so 672 F4, is that if you received a gift from a foreign corporation, you have to include it in your gross income as if it were a dividend. So it's taxable to you. Now, the general rule doesn't apply if you can show that basically what happened here is the individual, the non-resident that controls the company, basically took the money out as a dividend distribution and then subsequently gifted it to you. If that's mechanically kind of what happened, then it's okay. But again, that's a burden on the U.S. person to be able to demonstrate that. So the general rule is this first one there. It's got to be a dividend. But you can overcome that presumption by showing the alternative there. Now, in an effort to just avoid all that confusion, we would always recommend not to just do this in the first place. If you're going to make a gift of property from a foreign person, just have that gift come from that person directly and make sure that it's not U.S. situs property. All right. Now, failing to file the 3520 is hugely problematic, right? So there can be some severe consequences. If a U.S. person fails to file the 3520 to report the gift, they may be subject to a 5% penalty on the value of the gift, up to 25%. And ultimately, the IRS can recharacterize how they want to treat the receipt of those funds. So they can leave it as a gift, or they can treat it as a loan, or recharacterize it as income. So it's really, really important to get the gift returns filed so you can avoid these kind of issues. Now let's have a look at the fact pattern here, and then we'll get into the return. So we have Sarah taxpayer. She is a U.S. citizen and resident of Tampa, Florida. And Sarah has a wealthy aunt, Jane Smith, who is a Cayman Islands citizen and resident. Now, Jane has a Cayman Islands Corporation, Holding Company Limited, and this company gifted Sarah 20,000 CI or Cayman dollars on October 5th, 2023. The cash transfer was done from the corporate bank account into Sarah's personal bank account, which she also has in the Cayman Islands. Now, the U.S. dollar value of that gift was $24,309 on the date of transfer. So because it exceeds the thresholds, Sarah has to report this transfer. Now, what we're also assuming here is that Sarah can overcome that presumption that this is, in fact, a gift and it's not a dividend distribution from the corporate E&P. We're also assuming here that Sarah's aunt, Jane Smith, she's not also a dual citizen of the U.S., right? And she's also not a covered expatriate. That would also change the rules a bit here. And this is non-U.S. situs property, right? So we have a transfer from a foreign bank account to another foreign bank account. So we have no U.S. situs assets. So let's look at the 3520 here. At the top, we've got, we're indicating it's for calendar year 2023. The person filing is Sarah, so she's an individual. And the check box that we're marking here is the last one of the four, which is we are a U.S. person who, during the calendar year, received gifts from a foreign person. So we have to complete the identifying information and then part 4 of the form. So we've got Sarah's information here, her address, her social security number, and then the country where she's a resident, right? So this is the address in the U.S. of A. Now, item K here, we are marking this and indicating 1040 because Sarah filed an extension for her 1040. And if you extend the 1040, you also get the extension for the 3520 filing as well. Now, the rest of the form, you'll notice is blank, right? So all these other parts, 1 through 3, have to deal with U.S. persons and foreign trusts. We don't have any foreign trust arrangement here, so we can leave part 1, 2, and 3 blank. The part that we have to complete is on the last page, and that's part 4, U.S. recipients of gifts during the year from foreign persons. Now, question 54 has to deal with transfers that came from individuals or foreign estates. And so we're marking no here because we didn't receive a transfer from a foreign estate or individual. This money came from a foreign corporation. So on item 55, we have marked yes, right? During the year, did we receive amounts from a foreign corporation or foreign partnership that we are treating as gifts in excess of the amount provided in the instructions, right? And so we are marking yes there, and so we're inputting the information on the gift. So the gift was transferred on October 5th, 2023. It came from Holding Company Limited, and we have the address of the foreign corporation in the Cayman Islands. Now, item D is asking for any U.S. taxpayer ID number if we have one. The foreign corporation does not, so we've just inputted none. We have checked in column E that this is a corporation, right? If you have a transfer from a foreign partnership, you would enter that there. And then the description of the property received. So we have a cash gift of 20,000 Cayman dollars, spot rate on October 5th, 2023. So we have one CI was equal to 1.21547 US dollars. And so the translated amount into US currency is $24,309. That's the fair market value of the property that was transferred. Item 56, we've answered no, right? We have no reason to believe that the foreign donor making this gift was just acting as a nominee or intermediary. And what they're really getting at there is they want to see, well, was this actually kind of a transfer from a U.S. person? Because that would be that would obviously change the reporting obligations for both the both the donee and the U.S. person that was making the transfer. None of that applies here, right? This was a transfer from a foreign corporation, so that covers it. So that covers it for this video. Again, what we would recommend is just to avoid this kind of scenario altogether, right? We don't like gifts from foreign corporations or partnerships, but if that were the case, this is kind of how the reporting would go. So thanks for watching. I hope that was helpful. Any questions, feel free to leave a comment below. And as always, I appreciate it and I look forward to seeing you on the next one. Thank you.